Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May the 9th, and want to take just a brief minute to discuss what markets did last week as we had a return to the positive weeks last week, with the S&P 500 finishing up the week 55 basis points or 0.55%, followed by the mid-cap index, which was better at 1.17% higher, and is followed by the small caps as measured by the S&P 600, where the winners for the week up 1.3% on the week. So what was really encouraging about the end of last week is we did have that Fed Bank meeting where Chairman Jay Powell took additional rate hikes off of the table, and that allowed the market to refocus itself back on corporate earnings. And so we have gotten 80% of the earnings in for the first quarter of this year from publicly traded companies within the S&P 500, and 80% of those that have reported are beating, and the average beat is by 8.7%. And what's important about this is that the expectations going into this quarter were incredibly lofty and high. And we are at a place where we are seeing corporate earnings at an all-time high, showing the strength of the underlying economy that we do have, or at least the underlying profitability that the companies that are publicly traded companies have during this time and are making money. And so even though what we would point out to is that there's always going to be a proverbial wall of worry on Wall Street. There's the war in Ukraine. There's the war in the Middle East between Israel and Hamas. There's the upcoming presidential election. All of these things create volatility. These are all macro events that, yes, they can impact the bottom line on the micro side, but what we're seeing on the micro side is we're seeing great, strong, fundamental earnings. We're seeing a strong consumer and a resilient consumer. We are seeing some little cracks in the bottom third, but the overall consumer remains very, very strong. And so what we're seeing is this sets up perfectly for this market to continue to move higher. Now, nothing is going to be a straight line, because ultimately what drives this market forward is either one of two things. You either get exuberance about future earnings and future growth that drives the market ahead of itself, or the fundamentals itself lift the market higher. The earnings themselves lift the market higher and allow the market to move upward. And what we're seeing is that growth in earnings, as well as what we're seeing from the guidance this quarter, is for continued earnings growth next quarter. So that's going to allow the market to propel itself higher, even though we do have all of these things on the macro that are overhangs that could be putting a dampener on the market. So we still believe that when you really focus back and you take the noise away and you focus on the fundamentals, that's where the real investing is done, and that's where the real money is made. And that's why you can have a disconnect between the market and what's happening on a macro sense, is because it ultimately depends on how are these companies making money and how much money are they making. Are they returning capital back to their shareholders in the form of dividend and stock buybacks? Can that offset any softness that they're seeing? So as always, if you have questions about how to navigate this earnings season and what's going on, feel free to give us a call. We'd love the opportunity to speak to you, but we really believe that the fundamental earnings are going to continue to drive this market higher. The technicals look very strong. The money flows look very strong. We have a lot to be optimistic about in these equity markets. So give us a call. We'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.